Good afternoon, ladies and gentlemen. Welcome to the Board of County Commissioners work session. This is a budgeting meeting, September 1, 2020. I'm Commissioner John Hutchings, the chair of the board. We have Vice Chair Commissioner Mincer, and we have Commissioner Gary Edwards in the boardroom, along with County Manager Ramiro Chavez, Assistant County Manager and Finance Director Robin Campbell. We have Olivia Oudman, Patty Rosetto, Denise Cody, and we have Amy Davis, our clerk of the board. And whom else am I missing?
I think you cover it, Commissioner.
Yeah, how about our PIO? Is it Brian Dominique?
Yeah, he's helping us on the control room.
Ignore the man behind the curtain. All right, so we're going to start with Robin, I guess. Can you kick it off? Or do you want to start it off, Ramiro?
Just one opening statement, Commissioners. This is the beginning of a long journey. They will take the board all the way until December, when you will be approving the annual budget for 2021. So fasten your seatbelts, and here we go.
And this takes us through December, and this is the first 30 minutes of it.
Yep.
Oh, my goodness. Okay, here we go.
Well, this may be the first 30 minutes for you, but for everyone else, we're about 9 months in. This process is the ensuing fiscal year budget preparation. Our internal service providers started their budgets in January. Offices and departments have been working on their budgets since at least May. We had the official call to budgets at the end of June. Offices and departments submitted their budgets in August, the first part of August, and we are delivering to the Board of County Commissioners preliminary one budget, the agency or in the county office and department request budget. So I'm going to share my screen and just walk you through a PowerPoint of where we're at today and where we go next. Oh, come on, screen one. All right. So what we're going to talk about for the next half hour is a high-level overview of the current state of economic conditions. We're going to take a very high-level look at revenues and expenditures that have been submitted by the offices and departments, and then we'll look at the next few months and what's ahead. And okay. Just as a really broad brush, the county budget is over 80 separate funds. You have the general fund and you have everything else. And everything else is, for the most part, restricted on how you use it. But the Board of County Commissioners are responsible for all of the funds and for appropriation in all of the funds. We have 20 distinct offices and departments. 11 of them are headed by independently elected officials. That is your own office, the auditor, the treasurer, the assessor, the prosecutor, the sheriff, the courts, the coroner, the clerk, all separately elected. You also have 8 departments that are under the direction of the county manager, and you have one department, pretrial services, that is guided, if you will, by a joint executive committee of both offices and departments. Our operating budget is about $300 million. We'll get a little more detail on that. And one of the things that's happening is phase 2 of direct appropriations. I'll talk more about what that means when we get there. But at the bottom line, the budget in 2021 will be a little less than it was in 2020 because we are appropriating funds direct to the office or department that uses them instead of doing transfers. And then the capital budget is for the total cost of each project. You appropriate the capital budget by project. It balances to the capital facilities plan. And the way you budget for capital is considered a best practice, and it provides flexibility between years. So it's total project cost. Here's how the economic outlook is shaping up. At the state level, the Economic and Revenue Forecast Council, in their August update, has reported that retail trade is stronger than expected. The main ones that are coming in much higher than we projected, than the council projected, are the automobile trade, non-store retailers, electronics and appliances, building materials, and garden supplies. Those are the sectors that are coming in very strong. But non-retail trade is down year over year. So even though it's up above the June 2020 forecast that the council published, they are actually down about 13% when compared to last year. And the accommodation and food services revenue is down by 43.8%. And I see I have a dollar sign that I need to take off of there because that's a little confusing.
Yeah.
Recollections are higher than the forecast. And liquor sales are up, so liquor taxes are also higher than forecast.
You're welcome.
Yes.
What about marijuana?
You know, I haven't looked specifically at the marijuana revenue. The forecast that I looked at, I don't remember what they said about marijuana. We think that it's coming in a little higher than expected, but these are the taxes that the county will also see some effect from, and the marijuana revenue that we received is a fixed amount. The state has set an amount that will be shared with local government and no more. So what we see is our amount is flat for the marijuana revenue, even if the state is collecting more. At the bottom, you see that the state of Washington continues to anticipate a $4.3 billion deficit in their next biennium.
Hey, Hutch.
Yeah, go ahead.
I'm kind of curious, are we going to be able to ask a couple of questions as we go along here? I mean, we've skipped the property tax. I'm kind of curious about that, but I don't want to interrupt if we've got a plan here.
Robin, would you prefer questions at the end or as we go along?
So I can take questions as we go along, but you're going to have to jump in because I can't see you.
Yeah, okay. Okay.
Nor can I. And my only concern would be if you are going to ask a question that comes up in 2 slides, then it takes longer than 30 minutes. We only have 20 minutes now.
Right. And we're going to have all day tomorrow and Friday.
So why don't you let's hear the presentation, write down questions. If they don't get answered, we'll have time at the end or tomorrow to hit them.
Okay.
All right. Thank you, sir.
Okay. So Washington's anticipating a major deficit, and they have implemented furloughs, and they are mandating savings in their agencies. Is this not doing what I want it to? So in Thurston County, our property tax increase is limited to 1% growth plus new construction. And as you can see, new construction this year, the assessor has reported to date $738.4 million, which is growth of 13% compared to last year. And we'll look at a graph in just a moment. What's interesting about that is the majority of the growth is happening in the incorporated areas, not just the UGAs, but in the cities, and actually in the unincorporated county saw a 2% decrease in the value of new construction this year. The residential real estate market remains strong in Thurston County. Houses are selling like crazy. However, the commercial market is considered to be at risk because small businesses are starting to close down from revenue loss from COVID. Through August, our sales tax revenue is strong, and we'll talk more about sales tax soon, but this is the information that I provided to you last week. The unemployment rate is starting to drop. It hit a high of almost 16% in April. It's down to 9% in June, but we still see unemployment claims, new claims being filed in record numbers. And we'll look closer at the unemployment trend in just a moment. The population growth in incorporated Thurston County is 2.8%. Unincorporated areas are also growing, but by less than 1%. And it should be noted that population growth is part of what drives the demand for services in the county. So when you hear offices and departments say they have more people to serve than ever before, they have a greater need, that is absolutely true. The state budget crunch may affect county revenues. We don't know yet. When the legislature convenes in January, one of the first things they will begin to do is try to find a way to address that $4 billion shortfall. And the governor's office is working on that right now. So the governor's budget that we see come out in mid-December, and then the legislature, whatever actions they take, they may pass the pain down to the county through reducing shared revenues or reducing grant opportunities. And then, as I always say, the cost of doing business outpaces the growth in our revenue. So here's the new construction values that I was talking about. And what you see is in 2007, this was the peak. This was about $1.1 billion in new construction cost or value, new construction value in the county. And the what you see is, again, the beginning of the Great Recession was caused by a collapse of the housing and construction industry, mainly due to the market for mortgages and the way the mortgages were collapsing. So here's the big dip. It got down to around 300 million. It stayed flat there for a very long time. And just a few years ago, we started to see the growth where new construction values came back. This year, we're at $738 million in value. Not near the peak. We were starting to get there, but we haven't hit the peak yet. And this may have just kept going. We may still see it keep going. But as you see, it's right around the start of the recession that values come down. So this is one of the things we don't know where it's going yet. And by the way, a lot of this new construction was done within the last year, much of it pre-COVID. Here's the unemployment data. This is annual. Again, no surprise here. These gray areas are recession years. So unemployment goes up when a recession kicks in, hits a peak and starts to come back down. This is when the oil crisis hit. The early 2000s is when we had the dot-com bust right after 9/11. Here's the start of the Great Recession. That was the housing bust, went up quite a bit. These were historic numbers until now. It's very likely that we'll see the next dot for 2020 be off the chart. This is 2019. And what you kind of see here, the beginning of, is we had hit the dip. This was the longest expansion in US history. But all economists were starting to agree that we had kind of hit the peak of that. Things were starting to soften. So even if we hadn't had a pandemic, the economy was not going to be as robust in the next few years. We certainly didn't expect this kind of drop off a cliff the way it's gone down, but it was starting to soften even then. And here's where you see just the huge spike in unemployment, and then it's starting to come down again. Even with this drop, it's higher than it has been. You see down here the last four years, and you see that at 9%, it's higher than it's been in years, like over 10 years, and probably what I've heard is highest since the Great Recession or the Depression. Sales tax is the big unknown. And this is what we've been talking about for months now. This need to start to get comfortable with uncertainty, because we certainly have uncertainty here. Sales tax makes up about 18% of the general fund revenue. April through June had dropped just like we thought it would, and then it popped back up in July and August. And it's mainly retail. And what the economists are saying is that things were opening back up and people were going out and spending their money. And the pop back up is all about retail. The Economic and Revenue Forecast Council, as I've already said, has reported that they also saw an increase, as many other jurisdictions did. But they have said in their update, the August update, that it remains to be seen whether this increased retail activity is sustainable or if it's the result of a temporary release of pent-up demand. So here's how it looks in Thurston County. This is year-over-year percentage change. This is all the way back to 1992. You see a recession, it comes back up. Here's the dot-com bust. Here's the Great Recession. It's coming back up. And as I said, pretty much hit the peak out here in 2018. 2019, the growth was not as robust. This is our pre-COVID forecast. If it came in right on the money where we thought it would be before the pandemic hit, it's already starting a downward trend, and it is probable that this will not be as good as it's shown here, and where it's going from here is very difficult at this time to predict.
Okay, 10 minutes, time check.
So that's the economic overview. Here's what the budget's looking like. In revenue for all funds, we start out in 2020 with a budget of $341.6 million. In 21, that drops. A lot of that is the COVID money coming into the county goes away in 2021, and it continues to drop in 2022. And you will only adopt an annual budget, but we had the numbers for both years, so we're showing you what we got. Here it is in the graph where you see taxes. When you look at the overall budget, make up the largest percent, and then charges for other services, like in our permit center, make up a pretty good chunk. Here's the types of revenue that we receive. Taxes are things like property tax, sales tax, charges for services, garbage fees at the WARC, internal service costs are counted in that group. Intergovernmental revenue is state and federal money and state revenue sharing. We sell licenses and permits. We collect fines and forfeits. We have miscellaneous, and then we do transfers from fund to fund, and that's part of what we're trying to contain with direct appropriations. At this time, the general fund revenue, we didn't change the 2020 revenue from COVID impact. So in large part, you see the taxes are the same as in the 2020 budget, but it starts to drop in 2021 and recover in 2022. And what you see here is an assumption that this is a V-shaped economic downturn. It'll come down and then it'll start to recover, a long, slow recovery. In the general fund, the largest share is taxes. And here is the general fund revenue taxes broken down, since those are the biggest share. Some growth in property taxes, a drop in sales tax, and then back to growth. All other remains pretty flat. So sales tax is assumed in 2021 to be pretty steady, not a lot of loss, and then some growth again in 2022, but not robust growth. Here's the tax revenues on a graph, and because this is very interesting, people pay their full property tax to the county, but the county keeps very, very little of it. The county retains 16.31 cents of every dollar paid in property tax, and that's distributed between 6 of our funds. The general fund is currently going to collect less than 10 cents on a dollar. A few years ago, it was 11 cents on a dollar, but state and local schools have increased, and so we keep a much lower share of the taxes that are collected. Looking at expenditures, all funds, the total budget in the current year, $402 million. We're projecting costs of $373 million in 2021, and we had requested expenditures of $373 million in 2022. In the general fund, $113 million this year, going down next year, but not by a lot. And the main driver that's bringing it down is the COVID money that we won't have anymore. Again, that's part of why it's dropping in 2021, and then slight growth in 2022. There it is on a graph. What you see is law and justice in the total budget is, I'd say that's right around a fourth if I was guessing. And Health and Human Services is a pretty big share of the budget. When you look at all funds, this is economic vitality, that includes transportation. But when you look at the general fund, law and justice makes up a much bigger share. It's actually gone up. And I'll have the math for you on that tomorrow, but it's about 80% of our budget in the general fund goes to law and justice. And this is what offices and departments have requested. Again, this is for you to consider over the next few months. A few things to know about this budget is the debt payments include a few assumptions. One assumption that I made was that we are going to have money for courthouse infrastructure, and that'll be one of the things we talk about over the next few months. So I included some bond revenue, and we'll have to consider if that's something you want to do or not. It's not a large amount because we don't have a levy increase assumed. So we'll have to find a way to pay for it within what we currently have. And then we're also considering issuing bonds for the ERP. You should also know that preliminary one does not include COLA. Generally, the Board of County Commissioners adds funding for the COLA at the end of the process. And then we have capital improvement plan for your capital budget, and here's how that's shaping up. So here's what we're doing in the next few months. Tomorrow and Friday, we will spend the day in budget review. I'll have forecasts for you, and we'll start to look at the requests in detail. October 5th through 16th, every office and department will have an opportunity to sit with you and present their budgets to you so that they get to tell you why they have asked for what they're requesting. November 5th through 13th, we'll hold work sessions where you will make your decisions. And on November 13th, we'll need your decisions, your preliminary decisions, so that we can publish the Board of County Commissioners' preliminary budget on time. December 7th and 8th will be public hearings, final deliberations on the 9th and 10th, and we have adoption scheduled for the 16th. So that is pretty much my half hour for you today.
Wow. And we're hitting this at 9 a.m.?
I think that is what time we're starting.
9 a.m.
Okay. Let me start with Commissioner Mensah real quick. Do you have any questions real quick? Then I'll get to Gary.
So I guess the thing that stuck out to me the most of what you just said is that in tracking the budget over the last some years, the law and justice general fund percentage has been really, really steady, like 74.5%. And to see that at 79.5, 83, and then 85%, I just don't understand. Yeah, that slide, who's asking for what? Like, why is that percentage going through the roof compared to the last decade?
So I need to clarify this. This is not the percentage. This is the dollars.
Oh, okay, dollars.
Dollars.
You did say 80% though, which made me think you were reading the 79.5%.
It looks like about 80%. I'm going to have to do the math, and I'll have that for you tomorrow.
Okay, very good. My other question, which hopefully is short, is you said that the state budget crunch could hurt counties, and you gave two examples of reduced grant opportunities and reduced shared revenues. And I'm going to ask a really kind of vague question, like how big could that kind of an impact be in terms of if the state really wanted to squeeze the counties? I mean, how much power do they have over our purse?
We could lose millions.
It's a significant factor.
It is.
Okay, well, I'll leave it at that.
Hey, Gary? Oh, go ahead. I catch you off.
Yes, I'll keep it really short.
Okay.
Why is it when we get presented, like even today, now I know tomorrow we'll be over to go over this because I've got quite a few questions, you know, every other page or so I've got some questions, but why is it that we couldn't have some exact numbers? We're basically on pages 14, 15, 17, 18, 19, 20, 23, 24, 25, and 28. We've got maybes of 2020 because we're not done, and then 21 and 22 are speculation. How come we can't have 19, say 18 and 19 even years, 18 and 19, to give us some real perspective about maybe even what was asked for, but what was finally approved? But on all those pages, why can't we go back so we have some real comparison that we can be thinking about as we make these decisions? Just a point of interest that would make it at least easier for me to figure this out.
Sure, we can provide prior years as we go forward. Maybe not by tomorrow, but we can certainly do that as you start to review and make decisions.
Okay, thank you.
Very good. That's a good question. I like that. Or a suggestion. All right. Anything else, Robin? And then I'll get to Romero to wrap it up.
Oh, it's just a preview today.
All right. What's the appetite? WHETT. Go ahead, Romero.
I really don't have anything else to add other than I guess we'll see you tomorrow morning, 9 a.m. And again, this is just the beginning of many meetings with you.
Yep. Bring your Red Bull. Okay. All right. We'll see you in the morning. Thank you all very much for this beginning.
Thank you.
All right. Bye-bye.